Good morning everyone. So this is the first video I will do specific to an investment matter. And I think it's very important if we start this adventure on investment that we set the scene very straight. So I want to give you an idea where the market is regarding to QQQ, SPY and IWM. So I start today with QQQ, then I will move on to SPY and then after that to IWM. So today the video is really to give you a deep overview of where I think the QQQ is and where it might move next, and the critical level that we need to watch out, and the probability that you have a correction or not if we look at the past data. So let's go straight into what we are talking about. Okay, so basically you have the QQQ here. You can see that the price of QQQ right now is trading as 538, which is significantly above its moving average, whether it's at the 9 days, the 22 days, or the 55 days. The 200 days is very far below the current price, which actually showed that the market is extremely bullish and is very vulnerable to a mean reversion. So what we have here is a risk that the price is overextended above key moving average and increasing the probability of a pullback or consolidation. So if we look at the Bollinger Bands, Keltner Channel Bands, then we can also see that there is an extension. So the Bollinger Bands, you can see it here, you can see the yellow line. You can see that they are both, whether on the Bollinger Bands, on the Keltner Bands, here, on the red line, you can see that they are both on the upper channel of the volume. So basically that suggests that the price is approaching an area of resistance, especially on the Bollinger Band. So the risk is a pullback to at least the middle of the Bollinger Band, which is around here. So I would say 507, but I wouldn't say that we will do that because we have already tested that level, the middle of the Bollinger Bands. If you look like if we zoom, you can see that we have clearly tested. You see we have a descending channel, which basically normally is a bull flag. So we have tested the middle channel already, and then it rebounded from that to the upper channel, upper bands of the Bollinger Band. So let's see now what will be next. So if we look at the volume profile, the volume profile is here. Let's have a look at the volume profile. Then you can see that there is a weak support at this level. I mean, here you see a very big amount of volume for trading here and trading there. So you can see that the volume is actually decreasing. The more we go higher, the less the volume. You can see the volume going really low. So that's something usually suggests that the QQQ is trading in an area of low liquidity, making it susceptible and vulnerable to sharp price swing in either direction. Or it will go up massively, or it will go down also massively. So the risk here is that if the seller step in, there is a little volume support to hold the price in this range. So if there is a low price support in range, it means there will be a correction, and a sudden sharp correction. Let's move next to the RSI. What the RSI is telling us. The RSI is at 64, more or less 64.11. It's clearly approaching the overbought level of 70. The RSI is not yet in extreme overbought territory, but it has been hovering near the level of overbought territory. The risk here is the momentum may slow down and lead to a correction or a period of sideways consolidation. There is also some psychological and technical resistance at 540. 540, this is basically the all-time high. The price has rallied very strongly. You can see from the low of 2022, when actually we actually have witnessed a tech crash, I would say, because you lost actually almost 38%. If you calculate here, you go from the top to the bottom, you can see you have more or less 40%. So is more or less 38%. So this rally has been very, very strong. %, you have rallied from the low of 2022 for the QQQ. So now we can see that there is a psychological level here that we can see some retracement or some correction. There is a possible also bearish divergence because the RSI is rising. The price is making new highs without significant increase in the momentum. This could indicate a bearish divergence where the price makes new high, but RSI does not confirm with higher highs. So the risk, this often precedes correction. So if we can summarize the main risk that we can see with the QQQ, you can see that there is a sign of an overextended market. Price is far above moving average Kettler channel and the Bollinger Bands. Weak support at the current level with the volume. Volume of trading is very, very weak. RSI is nearing the overbought level, but not yet at the overbought level. And you have a psychological resistance at 540. So what possible scenario we can see now that we reach this level? So the first one is that there might be a short-term pullback. And the short-term pullback, it will be around 510, 520. So that means we're going to retest again. Hold on. I'm going to show you, I'm going to zoom. This means we're going to retest again that zone here. We've tested it one time, then it rebounded. Maybe we tested another time, then maybe it go up. Or maybe we tested another time, then it hovers on the sideways, and then after that it goes down. So this is one of the possible scenarios as well. Or we have a blow-off top scenario. If buying pressure continue aggressively and the QQQ might speak further before a sharp reversal. So basically what happens sometime, you have a sharp breakout and after that a sharp reversal. This is actually a fake out. So the traders are tricking you to buy massively into the QQQ and then after that they just repel you while you are doing that. If you are bullish, I would say that you should consider waiting for a pullback to a moving average support like the 22 or the 55. 22 and 55 is around the 500 level. And if you're bearish, you have to look for sign of a weakness near 540 and consider hedging with put option or selling cover call. On to the next deep dive analysis on the QQQ. What I've done is I've looked at all the anomalies within different time frame of 2 years, 3 years and 5 years and longer than that. So just to identify if there are any meaningful trends or patterns that we can assign some risk or some opportunities. So the first one, we can see clearly that the 2 years rally has been too steep compared to the past. When the rally is very, very steep, then there is always a risk that there is a sharp correction, especially that you haven't really had any meaningful pullback during this 2 years rally. The 3 years recovery looks artificial and lack real fundamental backing. So basically, you can see that the massive correction in 2022 has been done mainly because the Fed has actually cut the liquidity in the market, and the rally has been very, very strong from after the COVID-19 crisis. So you can see a very, very, very sharp rally. Then actually the Fed has started to indicate the market that they are going to start to increase rate, and they are going to combat more inflation. And because they're cutting rate, they're actually cutting liquidity out of the market. This has been the most unprecedented level of liquidity injected to the market after the COVID-19, and they were starting to withdraw this liquidity from the market. So then when you withdraw liquidity from the market, you always have a sharp correction into the market price, asset price, but especially into the tech sectors. So this 3 years correction, if you look at the last 3 years, then you have a sharp discount of 40%. It took the whole 2023 to correct, and after that only the I would say the gain of 24 are real gain from the level of 2022, the high of level 2022. So basically, if you were already invested in 2022, you only had more or less 30% of return over the last 3 years. Of course, if you time the market perfectly at the bottom of the 2023, then of course you get a 100% return. But I doubt that most of us actually time the market perfectly into the lows of 2022, 2023. So basically, I would say that the level of the market today is not so much exaggerated. It's overextended in some aspect, but it's not so much exaggerated for the last 3 years return, because 30% over the last 3 years is not that much for a tech sector index. So the biggest warning I would see is that the QQQ is the most extended it has ever been over long-term moving average. You can see overextended from this moving average, especially the 200, and that's not a good sign. It's never a good sign when you have that overextended. They always have mean reversal. Mean reversal is very important, and you need to be aware of that. RSI diversion suggests a loss of momentum. There is a parabolic rally resemble the 2000 and 2021. Of course, this one is very, very sharp. So the years 2000, 2021 rally has been extremely sharp as well. And after that, there was a major correction after that sharp rally. The volume profile showed there is a weak support above 500. So you need to bear in mind that this volume is extremely low, and that can be very negative for the market. So if you are bearish, then I would suggest that you buy put options, or you are trying to sell calls, or you wait and see what will happen above around the 540. If it sharply break out the 540, then I would say that it's maybe time to not really hedge the portfolio and let the rally continue. You never know how long the rally can really last. And if you are bullish, be cautious about adding at this level. Consider trading stops and covered call to lock in your profit. Watch for confirmation of a breakout above 540. So the critical level to watch is 520, 500, 480, and 450. This level. Okay, 520, that's the one we already tested. 500, that's the one we tested already. 480 is about here. We already tested it, is the lower band of the Bollinger Band. and 450. That's the one. That's actually the support of the previous sideways market here. 450. The resistance is for 540. So it looks like on the pre-market today, you can see the pre-market, it looks like that the market wants to go higher than the 540. So let's watch what will happen during the session, and we will do a briefing after the market to see what happened really. Okay, we can continue to try to identify key anomalies also compared to the past market crashes, so then we can identify if we are close to a market crash or not, to a market correction. You can see that the volatility, then if you take the VIX is very, very low. Because usually when there is complacency in a bullish market, the volatility tends to be extremely low. And extremely low volatility means there is complacency in the market. So market volatility is below historical average, which always precede crashes in 2000, 2007, and 2021. This is a very key indicator for market crashes. Low volatility suggests overconfidence and FOMO-driven market as well. So this is always preceding market crash or meaningful market correction. The market will correct. So I would say there is a high probability of a correction of -15 to -30% because of all these indicators. You get a combination of low volatility, extremely steep bullish market, and you have an RSI that is close to the overbought territory. And historically, that's always been a key indicators to a meaningful correction. So I would say that there is a high probability there is a correction of -15 to -30%. So the QQQ is at high risk of a late stage bull market. So we are definitely not at the beginning of a bull market, not in the middle of a bull market, but this bull market is at the latest stage. So it can continue, of course, for some time, but it will not continue forever. So you need to understand that that probability of correction is extremely high right now. If you are bullish and you are expecting more upside, you have to wait for a correction. You need to be patient, and you need to wait for a correction of -10% before you enter new position. You have to monitor the RSI and the volatility spike. If the volatility starts to spike, then it's an indication the market will correct. If you are bearish and you expect a decline, then you should hedge with put options or inverse ETF like the SQQQ. You have to prepare for a potential -20% correction before some stabilization and the market start to recover. So the final takeaway of this session today is this one. The QQQ current trend is historically unsustainable. The low volatility and overbought RSI is a strong indication of a late bull market phase. This is extremely high risk at the moment. A correction is highly probable before another bull phase. I don't know if there is anything else that you want me to cover, but for today's session, I would say that this is the most we can do, at least for the QQQ. I'm heavily invested in the QQQ, so I'm watching this market every single day. And I can tell you that this bullishness is not gonna continue for a long time. What we can also observe is that the QQQ is starting to break out. Okay, at least today it really wants to break out. But if you look the equally weighted QQQ, it has already breaked out. You can see that means that if there is a rally and the rally continue on the QQQ, then it will come from the broadening of the market. You can see clearly today the QQQ equal weight is clearly breaking out. from the trend. The QQ has not break out yet, but it will break out eventually, because if all the market except the MAX 7 is rallying, then this one also will rally. But it shows that the rally today is fueled not by the MAX 7, but is fueled by the overall tech sector. The MAX 7 is actually lagging because I'm investing in a fund that is only investing in the MAX 7. It's called MAX. It's called the Roundhill Magnificent 7 ETF. And you can see that the breakout is not happening with the MAX 7. Actually, it pulled back a bit from the all-time high. It pulled back here, and now it's trading sideways. There is a downside trend here, limit. If it break out this downside, then of course it will continue to break out. Then if it's just stay trading within the limit of that downside trend, then it might break down to the 52 level, which I intend to add. And then if it break out, I will wait before it break the level of 58 before I head to my existing holding. That's my plan. So basically the QQQ is in good shape. There are a lot of risk, but it seems that the market wants to continue. So be careful. Have a plan on where you want to add your investment and where you want to hedge part of your investment. So that's it for today. Thank you for watching the video. This is the first video, so it's not perfect. I will improve the style. I will improve the narrative, and I will make sure that there is more slides and more pictures and so on the next videos. But it's just to get the channel going. And I thank you very much for subscribing and to click the like button to help this very young new channel. This is a daily adventure that we're going to spend together for years. If you want to have this journey with me and go along the market and make money with me, please join me and subscribe to the channel. Thank you. Bye.